Hello, and welcome to Own Your Retirement. My name is Albert Lalonde from Kaizen Financial Group. If you'd like more information about what you hear during our show today, give us a call at 586-752-7008 or visit us online at www.kaizenfinancialgroup.com. That's Kaizen, Kaizen. And while on my website, click on the podcast page to check out my past shows and to subscribe to our program on Apple Podcasts, Spotify, or Amazon Music. Okay, the holidays are behind us, so it's time to take down the decorations and lights and make some 2025 financial New Year's resolutions. As you look forward to the months ahead, what are some of your financial goals? Do you want to increase how much you're saving for retirement? Do you want to get out of debt? During today's show, we're going to chat about some of the financial New Year's resolutions that can help you meet some of your goals and have you looking forward towards retirement with more confidence. Now, before we get into our topic today, however, let me introduce my co host, Tony Shore, whose biggest New Year's resolutions better be to improve his fantasy football skills.
Yeah, we were just talking a bit about that before the show, how the season is shaping up, and I
Yes,
I think I'm not alone though in struggling with fantasy football this year. That's
for sure.
that's that's for sure. But maybe this next season will be my year. I don't know. But all the Detroit fans, and we have a lot of them who listen to the show. I know you're a big Detroit Lions fans.
Yes,
They got to be excited about the Lions' number one seed, winning the
yes.
division again. I think you
Very
got a good
exciting.
shot at making it to the Super Bowl this year. My Vikings struggled against the Lions, but we'll see how it plays out. Um, but you're right. It's a new year, and we all set resolutions. I mean,
Mhm.
every year I say I want to exercise more, eat less pizza, uh,
There you go.
the struggle is real, Albert. The
It
struggle is
is.
real when
It
it
is.
comes to me and eating pizza. So I hope that goes well for me. But we also need to look at our finances for the next year and set some
Right.
resolutions to save some more money, things like that. Where do you want to begin?
Well, let's begin with a CNBC article titled Nine Financial New Year's Resolutions to Set Now and Achieve in the New Year. It has some excellent potential resolutions, the first of which is saving more. Now, as likely comes as no surprise, many people list saving more money as their top financial resolution. Fortunately, there are many ways to increase your savings. You can ramp up your 401k contributions, make automatic contributions to, let's say, a high yield savings account, and reduce your number of recurring subscriptions. Now, the article also notes there are currently several high yield savings accounts offering annual percentage yields of around 5%, including UFB portfolio savings, the Bass Bank interest savings account, and Lending Club level up savings. Furthermore, you may also be able to use a credit card to your advantage for expenses that you can't reduce. Now, many of the best cards available offer competitive rewards and statement credits that often provide cash back points or miles that can be used on purchases. In fact, the Wells Fargo Active Cash Card, for example, offers unlimited 2% cash rewards on purchases. Receiving 2% in cash rewards on your purchases is a very competitive perk.
It is. And you've talked about this on previous shows, Albert. Having a credit card may be financially necessary for some people. So why not find one that gives you as many advantages as possible, but you have to have the discipline to pay it off?
Definitely. You definitely got to make sure you're paying it off. Now, the next potential New Year's financial resolution is improving your credit score. Now, if you have a less than solid credit score, which is anything below about 670, make it a priority to improve it in 2025. You can do so in many different ways, including paying your bills on time and in full. With this, setting up automatic payments may be your best move. Additionally, limiting how many new accounts you open and reducing your spending are often other ways you can improve your credit score. Now, you may also want to speak to your financial service professional about free services that, well, give you credit for paying your utilities, phone, streaming services, and other eligible bills that aren't typically included on credit reports.
Right. And so I think you make a great point there, Albert. You want to check your credit score, make sure you're meeting with your financial professional regularly, maybe early in the new year to go over your strategy for the next year and discuss your goals. I think that's a wise move.
Definitely a wise move. Now, another wise or solid resolution is building a comprehensive personal budget. Now, while a budget may feel constricting, the truth is that carefully tracking your spending can be a valuable tool to provide a clearer picture of where your money is going month to month. In fact, a thorough budget can also provide information about what you can and can't afford, as well as offering opportunities for cutting back on your spending. Now, begin the process by writing down all your fixed expenses like your housing costs, phone, groceries, and savings. Also, reach out to your financial service professional again for a recommendation about a budgeting app. And make sure you also share your budget with your financial service professional because they'll likely be able to offer tips and advice as well as, well, using your budget information to find new opportunities for savings or investing your money.
Right. And building a budget that might sound like a small resolution, and people always they don't like the B word budget. Some people like to avoid that, but it's the small things that make a big difference. And when my wife and I started doing monthly, we get together at least once a month to look at
There you
the next
go.
month's budget, and it has helped us so much. And especially if you're in retirement or headed there.
Right.
Yeah.
And I agree with you there, Tony. I believe that both husband and wife should always be meeting together. We call it financial date night.
Ah,
Um,
that's
Now,
great.
another concept is paying off your credit card debt is another potential useful financial resolution. The reality is
Right.
that the average American is currently carrying a little more than $6,000 in credit card debt, according to the article. And if you want to get out from under credit card debt, you may want to consider consolidating it on a balance transfer credit card that offers zero interest for a fixed period. Now, typically, balance transfers must be completed within a stated amount of time. Now, while balance transfers may be a tool for getting yourself out of debt, you'll get the most benefit if you pay off the entire balance before the intro period ends. And before you make a balance transfer, though, be sure to familiarize yourself with all the terms and conditions that come with the card, especially the dates of the interest free period. And then once you know when that zero period or percent period ends, be sure to work with your financial service professional to build a plan that positions you to make a significant payments on your debt during the intro period so that you're more likely to be debt free when that window closes.
Yeah. Yeah, and staying out of debt is important. I mean, we all make mistakes or get into
Oh, yeah.
sticky situations sometimes, but you need to get that credit card debt paid off if you have any. I've seen credit card interest as high as 30% interest that
Oh,
some people
yes.
are paying
Mhm.
these days. So you really need to manage that, but just your overall plan, you have to have a plan, and you want to make sure that in the new year you're saving enough and your spending isn't out of control. But to get a financial plan in place and a retirement plan to save for retirement in place, our listeners can just give you a call and set up a no charge, no obligation consultation. You'll answer any questions they have about their finances, investments, retirement. How can they get a hold of you, Albert, to do that?
Yeah, folks, you can visit my website at www.kaizenfinancialgroup.com. That's Kaizen, Kaizen, or call my office at 586-752-7008. And we can discuss how we can answer your questions about getting your finances ready for the new year, your retirement goals, or any other elements of your financial strategy. Remember, it's our goal to help you prepare for the retirement you've worked so hard for.
All right. Well, today you've been talking about some potential 2025 New Year's resolutions. You talked about saving more, which is the big one,
Mhm.
improving your credit score, creating a personal budget, paying off credit cards. What's next?
Well, back to that CNBC article titled Nine Financial New Year's Resolutions to Set Now and Achieve in the New Year. Next presents paying off your full credit card balance at the end of the month is yet another smart move. Your payment history is often the most important piece of your credit score, Tony, which means that it's vital to pay your credit card balance on time and in full every month,
Yep.
regardless of what kind of card you have. Paying off your entire balance not only improves your credit by lowering your utilization rate, which is the amount of credit you're using compared to the amount of credit that's available to you. And most credit agencies like to see you use no more than 30%. But what it does is it also lowers interest charges or fees that can sometimes result from carrying debt from month to month. And if you're not always able to pay off your balance in full, you should at least make your minimum payment on time because it will help avoid late fees and penalty interest rates. And then
Right.
when you
And
yeah, and when you think about it, Tony, use it correctly. Credit cards can be a very useful financial tool for many people, but if we aren't careful, credit card debt can snowball us in a hurry.
yeah, it really can, Albert. And I think that, like you mentioned earlier, paying off that credit card, being responsible, it can be a useful tool, like you say. And you can really earn good points
Mm,
if you pay it off each month. And I've been drilling that into my kids who are young adults now, Albert. I tell them, get a credit card with good perks that will benefit you.
yep.
If you're a person that travels a lot on airplanes, get miles. If you're a person
Right.
who wants cash back or shops at one particular store a lot, get that credit card to earn points. But earn the points, pay it off each month. But you cannot ever put anything on it that you don't have the cash to immediately pay off. So
Right.
you have to have the money in your account,
Yep.
even if it's a regular credit card. Don't do it if you don't have the money in your account. That's the key, isn't it?
It is. It definitely is the key. Strong point there,
Yeah.
Tony. Next, while there's not a universal rule to how many credit cards you should have, the average American currently has about 3 cards. That certainly doesn't mean one card isn't enough or that 5 cards are too many. It all comes down to how many credit cards you can manage responsibly. Now, let's say you should note that each time you apply for a credit card, regardless of whether your application is approved or denied, the card issuer pulls your credit report. And credit inquiries can negatively affect your credit score, though it will improve over time. Now, spacing out your credit card applications may help you divide your credit checks over, let's say, a wider period, thus reducing the overall impact of your score.
Yeah. Yeah. A good thing to note, every time you apply for credit somewhere, they pull your credit score, and
Mm.
pulling the credit score can lower your credit. It's crazy. So apply for a credit card when you need one, but be thoughtful about how often. That's really good information. What's next?
Well, next you should do is your next resolution should be to check your credit score often. Many resources are available to regularly check your score, including Chase Credit Journey, Credit Wise from Capital One, and Discover Scorecard. They allow you to check your credit score for free. And then in some cases, you can get an updated credit score every month and see the factors impacting your score. Now, be aware that checking your credit score doesn't lower it. Don't let this persistent credit myth prevent you from improving your financial health, Tony.
Yeah. Yeah, there you go. And we talk about our physical health, how important that is, your financial health as well.
Yes.
That's important. But remind us of exactly what our credit score is. We've been talking about a credit score today. What is that? Why
Yeah.
is that important?
Great question. Your credit score is a 3-digit number, Tony, that ranges from 300 to 850. And it's tabulated using a review of your credit file. This is the number that tells lenders whether you're a credit risk or if you'll be able to pay back a loan. Now, credit scores factor numerous things, including your payment history and the length of your credit history from both your current and past credit accounts. And then credit score ranges vary depending on whether the FICO or Vantage Score model is being used and by which credit bureau. You have Experian, Equifax, or TransUnion who pulls your score. Now, ratings reflect bad, poor, fair, average, and excellent and exceptional credit behavior. So your rating is determined by your credit score. Now, though the article notes that lenders have a clear preference for FICO over Vantage Score, so much so that it's used in more than 90% of US lending decisions. It adds that you should regularly check, though, both your FICO and the Vantage Score numbers because they will give you an accurate sense of your standing.
Right. And there you go. And that's really helpful information, Albert. I mean, it's so good to set these resolutions. What other financial New Year's resolutions do you have for us?
Well, beyond knowing your credit score, it's also important to frequently check your credit report. Doing so can help you identify signs of fraud, which has been happening a lot more in the last past couple of years, as well as ensuring that the correct information has been reported to all three major credit bureaus, Experian, Equifax, and TransUnion. And then you may also access one free credit report from each of those three main bureaus at an annualcreditreport.com, which is dictated by federal law.
Yeah. Yeah, once a year you can check your credit score for free,
Mhm.
from and get it from all of those 3 credit reporting agencies. Just go to annualcreditreport.com. That's all one,
Yes.
annualcreditreport.com. So I think that's great. And a while back, we did a show about financial crimes, identity
Mhm.
theft, and scams out there. And they continue to be a concern for a lot of people. And I've found that monitoring my credit report can be a way to catch that and keep yourself safe from scammers. Make sure that your credit isn't being affected by somebody using your identity.
Yeah, it's one of the best steps you actually can take when it comes to protecting your finances from those bad guys, Tony. Diligent credit monitoring and identity theft alerts can let you know about potential fraud. Though some monitoring services come with a monthly fee, there are complimentary options like Capital One's CreditWise, which uses your social security number and even scours the dark web for your personal information. You'll receive automatic alerts with the latest information so that you can protect yourself.
Yeah. Yeah, and it reminds me of something you said about, an early year check-in. Why is
Mhm.
it, Albert, that you recommend your clients come in for a check-in appointment with you early in a new year?
Well, no matter how solid your financial strategy and no matter how diligently you stick to it, there can still be opportunities for adjustments that will improve your standing. And early in the new year is often the ideal time to do so. And perhaps we can adjust how much you're saving, or maybe a few tweaks could have you return even sooner than you had initially planned. It could also be that no adjustments are needed at all. Whatever the outcome, sitting down with your financial service professional early to review your strategy, it's never a bad idea.
Right. It never is, and I think that's great, Albert. So, a lot of our viewers and listeners out there would probably want to talk to you about this. How can they get a hold of you?
Yeah, folks, if you want to learn more about this, you guys can give us a call at 586-752-7008 or visit us online at www.kaizenfinancialgroup.com. That's Kaizen, Kaizen. And, we could talk about your New Year's resolutions, making sure you're on the right track and checking to make sure that you feel confident for 2025.
Yeah, I think this is great. So, what do you have for us in our final segment as far as New Year's resolutions?
All right. Well, let's stick with our New Year's resolution theme by now looking at another article from Truist titled "11 Financial Resolutions for 2025," which provides some information that wasn't in the CNBC article we just discussed earlier. In fact, the article first recommends building up a solid emergency fund. And how would you handle, let's say, an unexpected expense or let's say a loss of income? By setting aside an emergency fund, you give yourself a financial safety net. And knowing that pile of cash is there should you need it can make you feel more confident about your entire financial picture. Build short term savings goals and be diligent about saving the amount of money, whether weekly or monthly. And then put that money in a separate savings account. And before long, you'll see clear progress. In fact, for your long term goals, focus on putting away 3 to 6 months worth of living expenses in your emergency fund. Now, make the process even easier by automatically paying yourself first via direct deposit. And everything you contribute will make a difference in the long run.
Yeah, this is huge. And this is something that has helped my wife and I out in our family. And that is something that you've touted for a long time. And that's the value of an emergency fund. Build up that fund. And the
Mhm.
reality is, covering a surprise purchase with cash rather than a credit card is a huge relief.
Yeah, it really is.
Yeah.
Yeah.
In fact, ironically, I have to interject here. Here in the middle of winter, coldest month in Minnesota, our furnace went out this morning.
Oof, oof.
Woke up and realized the furnace wasn't working. Why is it so cold in the house? So that's a big expense.
It is.
And luckily, we've been putting money into an emergency fund, and hopefully, it will be enough to cover whatever might be wrong.
Yeah, yeah,
Yeah.
no, for sure. I mean, that's oof. You don't wanna have, those type of situations and not be able to afford to, well,
Yeah.
heat your house.
Yeah. Yeah. And you don't want to get into credit card debt with 30% interest to cover it either.
Exactly,
Yeah.
exactly. Well, let's talk about the next recommendation from this article on financial resolutions, and that is insuring yourself. Now, while an emergency fund is certainly a solid step to prepare for the unexpected, being sure you're adequately insured can often be just as important. So, work with your financial service professional to gain a complete understanding of your life, homeowners, renters, auto, flood, and disability insurance. Then do your research to make sure you're getting exactly what you need at a fair price. And additionally, if you haven't completed or updated your will, meet your financial service professional and an estate attorney to do so. Make sure your loved ones will be properly cared for, will give you a significant emotional boost. And relatedly, make sure your beneficiaries on your various insurance and financial accounts are also up to date so that an ex spouse or someone else who's no longer part of your life doesn't end up with some of your assets.
Yeah. Yeah, and we've all heard those horror stories, right? About an ex-spouse receiving a large life insurance payout because the
Mhm.
policyholder forgot to change the beneficiary. And no
Oh, yeah.
matter what you have on your will, beneficiary designations do take precedence.
Yes.
And you've told us this many times before. Your will does not trump a beneficiary stated on your policy, so that's important.
Very, very important. Yes. Now, the article's next financial New Year's resolution is to be sure you're saving enough for your ideal retirement. It references a recent survey that found that 67% of Americans have a retirement account, but just 34% think they're financially on course to secure their preferred retirement. Now, early in the new year, check your current retirement accounts and investments. If you aren't already putting money away for retirement, meet your financial service professional to discuss IRA, 401ks, and other potential options. The article recommends putting away at least 10% of your pre tax income in your retirement savings, or more if you can afford to do, or if you're running behind. One of the most common regrets retirees express to their financial service professional is not having started saving money sooner than they did.
Right. And the more you save, the more enjoyable and secure your retirement is likely to be.
Yes.
And I think that's huge. Listeners who aren't already doing this should work with a financial professional like yourself to devise a saving strategy for retirement, right?
Definitely, definitely. And also, let's say giving yourself a chance to have some fun. Well, that's also an important New Year's financial resolution as well. Financial strategies, retirement plans, and savings goals don't have to be about depriving yourself of the things that make life enjoyable. It's all about a balance. Crafting goals that accommodate your happiness and enjoyment are often just as important as concrete financial goals. Now, maybe it's saving for a home theater, going on a trip, or let's say building a backyard basketball court for the kids. Whatever it is, build it into your broader strategy. Now, if you're progressing toward your other savings goals, building things you want into your budget can be an excellent way to reward yourself and maintain your motivation toward your bigger long-term goals.
Right. And that's huge. You have to set those goals, work with a financial professional to do so. I think that's important. A financial strategy doesn't have to be this joyless slog that doesn't permit you
Right.
to enjoy life. It's about balancing your needs and wants and then wisely moving forward. And I know that's something you help your clients with, isn't it?
Definitely, definitely. Balance is key.
Yeah,
Just gonna throw this out there is, you never know what life's gonna throw at you. I
it's
just had
true.
someone that just got retired and they passed away this past Christmas. And it
Oh,
was just heartbreaking to hear
yeah.
that news, with someone that worked so hard to get to where they want. So you gotta balance that. Okay.
Yep.
Now, finally, while making a list of New Year's financial resolution is all well and good. It won't matter if you don't stick to it, which is
Right.
often easier said than done. Be sure to write down your goals and resolutions clearly so you can refer to your list frequently throughout the year. Reviewing your goals and resolutions in the weeks and months ahead can keep you motivated and moving forward. Also, be sure to check in regularly with your financial services professional.
Right. Well, I think this has been a great topic and a great show today, a lot to think about. So, before we go, let our listeners know how they can get a hold of you to set up that no charge, no obligation consultation.
Yeah, folks, you can visit my website at www.kaizenfinancialgroup.com. That's Kaizen, Kaizen, or call my office at 586-752-7008 to discuss how we can answer your questions about getting your finances ready for the new year, your retirement goals, or any other elements of your financial strategy. Remember, it's our goal to help you prepare for retirement so you can own your retirement.
All right. Thank you, Albert. And listeners, that does it for today's episode of Own Your Retirement with our host, Albert Lalonde.
Take care, everybody.